Hey traders, Happy New Year and welcome back to the FXC YouTube channel. I was wrong to say that price action was going to be messy at the end of the year. It was actually quite clean and I ended up trading most of that week. But now that we're in the new year and fundamentals are pointing to a weaker dollar, I'll do a top-down analysis and let's go through the charts and see if we can determine where EU may want to go next. But first, hit the thumbs up button and subscribe if you haven't already. Now let's get into it. Okay, so starting with the fundamentals. So in terms of fundamentals, it's still in favor of a weaker dollar. But for the time being, we are seeing a significant pullback on DXY. Last week we had NFP, which gave us spikes in both directions and didn't give us much clarity on the direction that DXY wants to go. And if we look in the coming week, it's quiet the first part of the week. We don't really have much in terms of events. And then on Thursday we have CPI and unemployment claims. And then on Friday we have PPI. So we may start to see some confirmation on which direction DXY wants to go. And if we look at the yields, so I'm going to go to the weekly first. So on the weekly, what you can see is see they've all come down quite deep into OTE. 5-year didn't get to the weekly fair value gap at the extreme, but you can see that the 10-year and the 30-year did. And since then, you can see we've had a massive pullback. It was all last week actually, so it continued down to the end of the year. And then last week we started to have a significant pullback. If we go on the daily time frame, so on the daily time frame, so what you can see is we've come into the weekly fair value gap, deep into the daily fair value gap across the board. And now what we need to watch for is if we start to see a reaction and reversal from this area, or if it starts to continue up and starts to break these highs and then just continues to the upside. So in terms of fundamentals, it makes more sense for a reversal and continue to the downside from here. But we just need to wait and see which direction the market wants to go in the coming week, because I think in the coming week we'll have clarity if it wants to continue to the upside and starts to break these highs. And potentially it just could go into the fair value gap and reverse from there. But as they've all been more or less mitigated to a certain extent, this one has, this one partially, it would make sense for this area to hold if it's going to reverse and continue to the downside from here. And then if we have a quick look at EG, you can see that at the end of the year we started to have a really nice push to the upside, and then it came back into daily supply, and thereafter last week it just slammed right back down. So as of right now, price is in the last daily demand that hasn't been mitigated, but it's at the very extreme. I'm not sure if it's going to break through and come lower, or if we're going to start to see a reversal from here. This could just be liquidity that it builds up, that it wants to sweep before reversing. But at the same time, I mean, looking at the way that it came down aggressively, reacted off demand, came back into supply, I mean, potentially it may just continue down from here. But honestly, I'm hoping it reverses from here, and that would more or less coincide with the overall bias of a stronger EU. Now moving on to DXY. So starting with the yearly time frame, so we had our candle closure, and you can see it's I mean, kind of a doji candle, small body, pretty big wicks on both sides, and you can see overall we didn't really have much movement throughout the year. And then this year it's already had some movement within this body. So now it's a matter to see what it wants to do next. The main areas that I'm watching for on this time frame is the yearly supply as well as this yearly fair value gap, because these are the two areas that the price is bouncing in between. So if it starts to come lower and reach down into these areas, I mean, that would make sense according to the fundamentals for now and what's expected for next year. I mean, knowing the fact that the interest rates will probably start coming down sometime next year, whether it's Q1 or Q2, it should facilitate a weaker dollar, and we should start to see DXY coming down. But for the time being, like I said, it's really bouncing in between this fair value gap right here, this bullish fair value gap, this bearish fair value gap, as well as peaking at this yearly supply. And then if we go to the monthly time frame, so on the monthly time frame, so you can see we had this just extremely bullish move to the upside, pull back into the monthly fair value gap, a lot of consolidation, and then towards the end of last year we had that last push to the upside, coming into a monthly fair value gap here. And then you can see we had a massive reaction off of it. And for the time being, it's at the lower end of the range. And as we're expecting a weaker dollar, it would make sense for it to start to push to the downside from here. But we do also have a bearish monthly fair value gap above that hasn't been mitigated yet. So it may go back to there at one point or another, whether it comes down, sweeps the liquidity before pulling back, like coming down, sweeping the liquidity, creating a lower low, and then coming back for the liquidity, and then continuation to the downside. This scenario would make more sense to me, but at the same time it could just push up from here, go for that inefficiency, and then come down after. And let's go to the weekly time frame. So on the weekly time frame, you can see it's come down quite aggressively in Q4. The low is created right here from the, once again, the monthly fair value gap as well as the order block on the left. And there was also a fair value gap here that it completely filled as well. And then after that, you can see we've had a massive push to the upside since actually the beginning of the year. So this last week was a push to the upside, coming back into the weekly fair value gap. You can see we've already started to have some reaction off of it. So it wouldn't be crazy for me to start to come down in a reverse from here, creating a lower low, and if it wants to go back up to the inefficient levels thereafter, that could be a possibility before continuing to the downside. But just looking at this, yeah, completely filling the weekly fair value gap. So this was all at NFP, so it swept up and then came right back down, actually came way down and then pulled back. So just need to see what happens here, if it wants to reverse and continue down from here or continue up into the order block, or potentially we have the buy side liquidity here where we have these equal highs and that weekly fair value gap. So like I said, in terms of timing, not really sure if it wants to come down here, break the lows and then go back up, or if it just continues up from here, targeting the weekly fair value gap and then coming down. But if you do look I mean, price did come into the weekly fair value gap, so potentially it may not need to come back here. But as I mentioned on the weekly time frame, we do have a very clear, unmitigated monthly fair value gap. So at one point or another, it does make sense for price to come back up. And then on the daily time frame, so on the daily time frame, you can see daily fair value gap was much wider. It's come well into that daily fair value gap as well. And let's just see if it didn't go into the 50%. It came really close to the 50%, but it did completely fill the weekly fair value gap. So yeah, you can see this massive whipsaw. So massive push up, massive push down, and then coming right back up to the mid area where it started. So, I mean, on the lower time frame, it does look like it shifted. So it could potentially start to come down from here, but you just need to watch and see if that's confirmed with the second break or not. Yeah, but like I said, I'm still bearish on the dollar. I mean, based on the fundamentals, so it would make more sense, whether it's here or if it does go higher, to eventually come back down, break the lows, and continue lower. And now 4-hour time frame, so that push up here into the fair value gap, coming back down, and then coming back down into the daily fair value gap. There was also a 4-hour fair value gap that it tapped into before aggressively pushing right back up, and came back up to inefficient levels. There's a 4-hour fair value gap that was created, so it may go back into that before coming back down. But at the same time, there's also an hourly fair value gap that was created from here to here, and this has already been filled. And this wick, disregard this wick, because I think that was nothing. I don't think it was real. So potentially it could already be a shift with the second break, but it's hard to say because we have this wick that we don't know where the low is. And on the hourly time frame, so yeah, on the hourly time frame, it looks like a clear shift here. So we broke the highs. Thereafter, it came back down, creating a shift and breaking the lows. So it would make sense. This is a pullback coming back into the inefficient areas, and you can see on the hourly time frame. So this fair value gap was created on the drive down, and it's coming back to mitigate that, and it's already starting to react. So come Monday, potentially we may see DXY immediately start to come down, and if it breaks that low, that's the second confirmation. We'll probably see a pullback and then likely continuation to the downside. And then once we break, or if we break this low, then that'll be clear confirmation that DXY will likely push to the downside from here. Yeah, so ultimately I'd like to see a weaker dollar, but as I said, it has been pushing up quite aggressively towards the end of the year, continuing on last week for the first week of the year. So we'll see from here if it starts to push down, and starts to break structure and continues to the downside, or maybe come back down into demand and then potentially start to push up from there, and we may see continuation to the upside. But for me, I mean, the more likely scenario at this point, I mean, with the shift is continuation to the downside. But it is in between two inefficiencies, so potentially could consolidate in this area as well before we see it move into the direction it wants to go, whether it be bullish or bearish. Okay, now moving on to EU. So starting with the yearly time frame. So you can see last year's candles right here didn't really have so much in terms of movement. I mean, compared to the previous year where we had a massive push to the downside, and then the year before that where we also had a pretty big push to the downside. But the main thing on this time frame is it is bouncing in between two PD arrays. So we have the yearly fair value gap here and the yearly fair value gap below. So this is on a yearly time frame. So 1, 2, 3, 4, 5, 6, 7, 8, 9 years of consolidation. So I mean, potentially we may just see price consolidate in this area, but at the same time we may start to see price push in one direction or the other. I mean, this looks like a clear sweep of liquidity. Oops. So yeah, so this looks like a clear sweep of liquidity where we had a massive reaction off of that with some continuation. So potentially this year we may see continuation to the upside, and that would align with my overall bias because I'm expecting a weaker dollar based on the fundamentals of what we've seen the last few months, as well as the anticipation of lower interest rates. And once we start to see the lower interest rates be introduced, it should start to push DXY to the downside, which should push EU to the upside. If we go to the monthly time frame, so on the monthly time frame, so you can see since the end of 2022 we had a very strong push to the upside, a lot of consolidation in this area. It kind of looked like it was topping out here and then looked like it was going to push right back down to the downside, breaking these lows. But at the same time, this could also be seen as a sweep, so sweeping of the liquidity here. So sweeping of this liquidity before changing directions and reversing and pushing to the upside. So we'll know for sure if it takes out this high right here, but that could be like weeks, months away still. And you can see there's also some inefficiency left behind, so potentially price may come back down one more time for that inefficiency before continuing further to the upside. But if you look at the bodies, it's already broken above the bodies. So if we use the bodies as structure points, then potentially we can say it's already broken structure to the upside. Weekly time frame. So weekly time frame, you can see that it reacted off a weekly fair value gap. So this could be normal to see this as a reaction point for pullback into inefficient areas. There isn't really any inefficiencies on this time frame. This monthly fair value gap that I mentioned before, you can see price has already gone through it on the weekly time frame. So I don't see this as a strong fair value gap anymore. And you can see we've mostly been mitigating the inefficient areas over and over. So potentially this could just be a drive back down into the demand, weekly demand, before reversing and continuing back to the upside. So we'll need to see a break of the previous high, and then if that happens, we may get that continuation to take out the weekly range high. Daily time frame. So on the daily time frame, we had a really nice push to the upside, and then at the very end of last year started to push down, and then strong continuation at the start of the year. And then in this area, so as I said before, we have the liquidity over here, swept all the liquidity at NFP. So this is the NFP candle. So came back down, swept all that liquidity, and then drove to the upside, coming back into the daily fair value gap above. And then after that, coming aggressively right back down to where it started, more or less. And if price came down to this daily fair value gap, if it just came a little lower, then I could see this as something like this, and then continuation to the upside. But the fact that it left that inefficiency behind makes me think that it may still want to come down and attack that inefficiency before reversing and continuing to the upside. But looking at, the daily structure, you can see this as a shift, a daily shift, creating a lower low, breaking the highs, pull back to inefficient areas, and potentially continuing to the upside from here. 4-hour time frame. So on the 4-hour time frame, so this is NFP. So NFP originally drove down, and then after that aggressively pushed to the upside, coming into the fair value gap here, having a reaction, coming back down, and attacking the inefficient areas that were created on the drive up. And potentially we may just start to see it potentially go into the 4-hour fair value gap here that it just created, or potentially if we go on the hourly time frame, it's already filled or mitigated the hourly fair value gap that was created on the way up. So potentially we may start to see EU start to push up from here. Once it breaks this high, then we'll have the confirmation, and then expect price to continue further to the upside. It's not to say that it can't come back down and come back for this 4-hour fair value gap later, but once we have that second break, then our direction should more or less be confirmed, and then at one point or another we can expect this high to also go, and then further continuation to the upside. We have a 4-hour and daily fair value gap above, which would be the first targets, but more than likely, looking at the overall structure, it would make more sense for it to go through maybe a reaction and a pullback, and then continuation after, coming back into the supply with a reaction, and then eventually breaking through, creating a higher high. So come Monday, I think, Monday, when the market opens, we may not see so much movement as Japan is off on Monday. So Asia session may be completely dead. But during the day, if we do start to see price push up, then we may get that confirmation, and then we can look for pullbacks and then continuations to the upside thereafter. But if it starts to continue to the downside, then it'll more than likely go for this 4-hour fair value gap, the 4-hour and daily fair value gap, before continuing to the upside. So just have to wait and see what the market gives us come Monday. We may not see so much movement because, as I said, there's no real news events at the first part of the week. So it may just slowly go in one direction until the news comes, and then after that we may start to get some real movement in the market. And it's CPI and PPI, if I remember correctly. So these are related to inflation. So if we see what we've been seeing the last few weeks, then we may see dollar start to push down and EU start to push up. Anyways, that's it for this weekend's analysis. Unfortunately, for the time being, we don't have that much clarity which direction EU is going to go next. But as I mentioned, if it starts to break down, we know where it's likely headed to. And if it starts to push up, I mean, the moment it starts to break some highs, then it's likely to push to the upside. And for the upside, we have our targets as well, ultimately targeting to create a higher high. Anyways, hopefully you found some value in today's video, and if you did, a like and subscribe would be appreciated. Enjoy the rest of the weekend, and I'll see you for the next one. Peace.
Black Swan.